Good morning. This is Marshall Giller bringing you the morning comment for September 3rd. The U.S. economy continues to outperform other major economies. The ISM index for August was expected to fall marginally, but instead it powered higher in contrast with most other countries. 15 of the 26 countries that reported on Monday saw a decline in their PMIs, including most of the major European countries. The good results sent Fed funds rate expectations up, and the dollar firmed against most of the other currencies we track. With interest rate expectations higher and the dollar firmer, it's no surprise that gold was lower, despite everything going on in the Ukraine. With the technicals looking poor too, gold seems headed lower for now, at least to me. At the same time, the indications of strong U.S. manufacturing weren't enough to outweigh the indications of a slowdown elsewhere, and oil prices fell sharply. But the technicals for oil are more mixed, making it a more difficult call than gold. Sterling was the main loser overnight or yesterday after a survey by YouGov, a British opinion research firm, showed support for Scottish independence rising sharply. This suggests that as the September 18th referendum draws near, more of the undecided people are making up their mind to vote yes. Now, other polls don't show quite as high a level of support for independence, but they do indicate the same trend. Since there was no risk premium for this potentially cataclysmic event at all priced into sterling, it's reasonable to expect the market to discount the possibility at least a little bit and for sterling to decline further. The technicals for sterling look poor too. As for today's events, the main thing will be the Bank of Canada policy meeting. In their last meeting, the bank kept a neutral stance with respect to the timing and direction of the next change in the policy rate and revised their GDP growth forecast down for this year and next year. I expect them to repeat themselves and remain on hold. I think the statement accompanying the release is most likely to reflect a dovish tone, which could weaken the Canadian dollar somewhat. The main indicators out today are the final service sector PMIs for August from the countries we got the manufacturing data from on Monday. That normally isn't so market affecting. Eurozone retail sales for July are also coming out, and the forecast is for the figure to drop from the previous month, adding to the recent weak data coming out from the bloc. In the U.S., factory orders for July are forecast to have surged 11% month on month, which ought to keep the dollar well bid. Also, the Fed releases the beige book, which is expected to be beige. For more information, including technical analysis, read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.